Good morning, everyone. Welcome to the Modern Market. This is our daily show from Monday to Friday at 7 a.m. Eastern Time, 12 p.m. BST, every day of the week, where we discuss all things to do with the modern market. That is the crypto market, the NFT market, and any other market, frankly, that operates on the internet where you have the opportunity to make some or a lot of money. I'm your host, Bchek. I'm joined by my legendary co-hosts, Sammy and Bread today. Cannot wait to get into a bigger discussion on everything that's been happening in the past 24 hours. But just before we get there, just a reminder, folks, that nothing that we say here is financial advice. We don't know anything for sure, so please do proceed with caution and exercise some of your own judgment. With that out of the way, Sammy, it is Wednesday. It is the 8th of May. Speaking offline, talking about a little bit of portfolio readjustment, reallocation. How are you feeling? What are you up to there?
Good morning. Just playing around, making sure that things are in the right spots. I think my internet might be a little bit juddery. I don't know if it's breaking up for you or not.
Seems okay at the moment.
Okay. Just a bit of portfolio allocation. Another jackpot yesterday with the big token, which I slotted in there, which was a nice little win. It was only, I think it was about 6%, but yeah, just moving things around, making sure that I'm happy with everything on Blastr, and also stalking you. Like going outside the literally just ran down the road from you yesterday, which was wild.
Yeah, people don't know. Sammy's dentist is around the corner from my house. So it turns out he was lurking around the corner, but then he couldn't actually come around because I had to do the Thread Guy show in the evening. So always funny. But we're meeting up on Thursday with Legendary, right?
That's tomorrow. Yeah.
Okay. We're meeting up tomorrow then. Fantastic. Bread, so nice to have you with us in the co-host spot for the second time, I believe, or maybe second time as a guest, up on video with us. For the people who don't know, we do this live on X. We're doing it live on video on YouTube as well. Also on Apple Podcasts and Spotify, you can watch the video too. Bread, how you doing? How you feeling, my friend?
Do an audio check. How am I sounding?
Yeah, it's working.
Good. Yeah, man. Yeah, life's going well. Just trying to decide where I want to spend my attention these days. It's always pulled from, with the Friend Tech launch and now the Fantasy Top and, a bunch of splat stuff and LRTs are launching, L2s are launching. It's hard to keep attention in one place, but trying to reassess, have fun.
Excellent. You mentioned a bunch of things which we're going to talk about today, and I'd be exceptionally interested in your takes on those things in particular. We've got the L2 mode that launched to kind of disappointment, which we're going to touch on in a bit. Also, the special topic for today for discussion is Fantasy Top. So definitely want to hear from you on that, given your credentials and your involvement in Friend Tech and all the SocialFi stuff as well. So we've got a lot to talk about today, a lot of interesting stuff. Just so you have a sense of where we're going, we're going to do talk about L2 mode coming out at a $500 million FDV. We're going to talk a bit of Fantasy Top. We're also going to talk about bold Leonidas's 500 ETH raise, using an interesting mechanic on Blastr. This is on Blastr. Going to talk about that. And finally, we're going to talk about Ethena's integration into some centralized exchanges. Ethena being the synthetic dollar, which some people are tipping to really become far more important in crypto as time goes on. So we're going to touch on that. I think it's quite an important development. Whether you agree entirely with Ethena or not, at least it's helpful to get a sense of where that's going. So we're going to get into all of that in a moment. But as always, we're just going to do the headlines first from the snapshot, which, Sammy, if you could please pin the snapshot up top, if you've got your phone with you. I don't know if you've got it. If you could pin it up top, as always, that's where we get the information from. And we'll do the price action as well. So I'm going to share this on screen for the people who are watching in, and we will get into it. Starting with some price action, we've got crypto at down a few percent today. Bitcoin at 62.3, ETH at 3K, down 3%, Solana down 7% at $145. As we mentioned, first headline, ETH L2 mode launches at 490 million FDV to general market disappointment. Interesting take from OXJPEG here. It said we have 100 L2s now, 52 active L2s, 42 upcoming L2s, 11 L3s. When I took Econ 101, my biggest takeaway is that companies will continue hiring until the marginal net revenue per employee is less than zero. Likewise, until the default L2 valuations sink low enough, We're just going to keep getting more L2s. Mode just launched at 500 million FTV, so we are not at that point yet. Interesting take. I want to discuss that in way more detail in just a little bit. Number 2, bold Leonidas sells out Blastman on Blast, raising 500 ETH, $1.5 million in minutes. It's refundable for 0.15 ETH. And there's 3,333. There's a 7-day lock. If you choose to take all your ETH out at the end, the artist basically just earns the interest on that locked up capital in the interim period. So we'll touch on that in a bit more as well. Finally, Bybit endorses Ethena's USDE token as collateral for derivatives trading. CoinDesk say that Bybit has integrated USDE as a collateral asset for derivatives trading and also listed spot Bitcoin and Ether pairs against the token. Using USDE as collateral could help perpetual traders to reduce risk, derivatives traders Joshua Lim of Arbalest said. Getting into some more price action on the NFT market, we've got CryptoPunks at 38.5 ETH, Bored Apes at 15.3, Mutants at 3, DGods at 2.3, Captains at 3, Azuki's at 5.3, Penguins down a few percent at 12.3, Mad Lads still sinking a little bit, down to 83 Solana now. The Nouns winning bid was at 7.4 ETH. That is some price action. Those are the headlines. Before we get into the bigger conversations today, Sammy, before we hit the main headlines and before we hit this bigger discussion on Fantasy Top, anything catching your attention, particularly since you've been kind of readjusting your portfolio in the last 24 hours?
Yeah, I think, I mean, the jackpot's obviously swaying a lot of stuff on Blast. So I'm kind of rejigging that. I made a post yesterday or the day before, I can't remember, time flies, but just about what I've included in there. And I think there is an element of pushing this social side. So hence why Big had a partnership with District 1 recently to innovate there. And I think that probably gave it some sort of weighting, if there is an algorithm or whether it is just a button someone presses to choose who actually gets picked. So just making sure that I feel comfortable with what's in there. And also with maybe having some left field plays, because I think people expected Big to be later, just because it's not a very high market cap. And I know there's been a lot of capital plowed into PackMoon in the past 24 hours. So I think that's hit new all-time highs. So yeah, probably more on the meme coin side, looking at sort of social plays, community strengthening, sort of aspects of things. Because I think on if we look at the Mintify heat map, it's just a sea of red at the moment. No significant swings either way. So I think just from that side, my attention's moved away from the ETH market, shifted over to the Blast market, and aspects like, I know Zenika's talking about doing a Blastr collection. Leonidas has just done one as well, which I guess we'll touch on shortly. So I think there's just a lot more attention that's shifting to Blast now, and I think that's where I want to be. So that's just making sure my portfolio is allocated accordingly. And even just in like taking ETH that I've staked in Wasabi, I just don't think it's the ROI is there anymore. I think there's a lot better plays, whether it's farming Blast or buying some of these assets now, especially with the redemption feature.
Okay, so it seems fairly obvious then that your attention is squarely set on Blast now. I'm just looking at this tweet that you put out yesterday. Maybe you want to highlight something for the people who are listening and watching in. So Blast will make millionaires. I've been covering the Blast ecosystem for 6 months, which is notable because one thing we've been speaking about offline, I don't know if you've experienced this as well, Brad, is like when something becomes hot and the attention gets hot on it, the people who write on Twitter almost professionally will start covering those particular topics, despite the fact that they have little underlying knowledge or experience doing that particular stuff. So yes, people are talking about farming Blast now because it's the popular thing to talk about. But one thing I would note is that Sammy's literally been in the trenches for 6 months doing this stuff. Similar with me in the sense that I think I deposited 20 ETH in November. And I think Legendary has been like obviously going incredibly aggressively across the board in this type of stuff. So very helpful to have people who are actually in the trenches kind of providing some of this information. Sammy, what do you want to touch on from this key thread that you kind of put out yesterday?
I think there's probably a number of elements in there. I mean, there's probably about 25 tweets in there, and it just goes back through since it launched back in November. So for anyone that's coming in fresh, it's a great starting point just to familiarize themselves with the ecosystem. I mean, I've started with the most recent first, because I think that's the most relevant. Obviously, you've got the jackpot, you've got Fantasy Top, And I've just kind of tagged threads in there where I've covered each one. Little things like adding pop-ups for Pocket Universe, which you've got up on the screen now. I mean, people earned based on the number of pop-ups they had. So Legendary pushing through his 5,000 transaction, he had Pocket Universe plugged in, so he would have got a fair amount of that 5,000 gold just allocated to him just for that. I've included some spaces in there, so we spoke about it on the Modern Market. I think we had about 1,200 people dial in, so there's some good coverage in there, some in-depth stuff that you can just listen to in the background. There's one on the Whale Show, Shiv's playbook. There's just like a lot of information in there, and I've had a lot of people DM me about, okay, well, how do I do this particular app, or which app should I focus on? And I think I just lay it out with that you have a list of gold distributions, which is a good starting point. You have a certain amount of gold allocated to each app. And I know we've touched on this in detail, so I won't go into too much, but just I've talked about in there like how to allocate your attention. And I think the biggest thing that we found, and Legendary, and you'll probably say the same, is we've picked a specific app and we've gone hard on it. And we found the nuances within that app, and that's how we've kind of managed to accumulate that amount of gold. So just don't spread your attention too thin to try and hit all these little protocols. And actually, the big ones like Thruster and the main dexes and perp dexes and things like that probably aren't the best places to get your ROI. So I just kind of touch on all that in that thread. I also talk about, with the jackpot being probably one of the front of attention now, probably one of the, I know NFT Stats put something out yesterday around recalibrating his gold valuations down to about $10 or $12, just because you have that additional sort of supply on the market. So I think just talking about that as well. So there's a lot of information there packed in there. And I think now when I have someone asking me, okay, well, where do I start? I'll just send them that thread and then ask them to read through. And if they have any questions, go
Makes sense. Sounds good. Maybe pin that one to the top as well. I think that'll be helpful for people to take a look at. That would be useful for people. Appreciate that, Sammy. Brett, you must be enjoying these YouTube comments. Just going to share some of these as we go through. Never a stale moment with bread from Kalano. First question, well, main question is, where's your attention going in this market? I'm just reading some of these comments. This is good stuff. Where's your attention going in this market as things stand? And B, do the bread jokes ever stop? Like, do they ever stop?
No, they don't. That's actually, so that's one thing I didn't know I was signing up for whenever I chose this pseudonym, was that, it's never ending. And everyone has their original one. So they think they have the original one, but it's fine. I like it. Sourdoughs, I hear that a lot. Attention in this market, honestly, it's that's when I was talking earlier about not knowing where to give my energy, because I'm looking, not even because you guys are hyper focused even within Blast and the gold earning ecosystem specifically, and there's a whole journey you can go on there. I come from, or I've been dabbling most heavily in like DeFi and a lot of the, because I don't like doing frequent trades. I don't like to be very active hyper trading. I like to have big moves that swing or make positions for a few months and then do whatever. So I'm coming up on that point now with some of my LRT farming, Eigenlayer, a lot of that stuff. I'm doing an evaluation and I'm saying, do I want to dive into Blast as a whole and then like maybe go down the rabbit hole with some of you guys and hyper focus on specific things, or is there other opportunities out there? So right now I'm kind of evaluating the whole market and seeing what opportunities may or may not be there. And I don't know, like I hate feeling like I'm late, and I don't want to be super hyperactive, and I'm hearing a lot of hyperactivity inside the Blast ecosystem, and like I don't know if I want to commit that level of time. So yeah, it's tough.
Fair enough.
I got a quick question for Brad. So obviously you've been hyper focused on Friend. Are you kind of seeing that as a potential play going forward, or is it very much you're looking for an exit and then into something new? Or
yeah, for me it's an exit, mostly because so people don't know my history. I work with developers, and I'm working on some products, so I know my time is going to be short here soon as a user, which typically what happens is like if you're actually building something, you don't have time to be user. Funny enough, like you're going to see a lot of spaces hosts and stuff. You spend so much time creating this stuff that you don't exactly have as much time to be on the other side, chasing things down, doing the degen things, whatever. So yeah, I know Friend, I had a lot from the V1 airdrop, 140,000, I think is what I earned. So I'm sitting on that, trying to monitor that, see how it's evolving. I'm intentionally not diving in, like spending that and getting tied into the ecosystem, because all the friend that we got from the airdrops, you can spend on clubs, you can do whatever. I'm consciously trying not to be a flipper inside that ecosystem because I just don't have the time for it. So I'm watching the ecosystem, trying to see where my exit's going to be, and then I'll still contribute there, like as a user, but I'm not going to be like a leader in that space, I don't think.
Great question. Definitely wanted to hear Brett's take on Friend. A final question before we get into the special discussion for today on Fantasy Top and the rest of the headlines, which I know I could see people in the comments talking about mode disappointing. So we're going to get to that L2 discussion. We're going to get to the bold Leonidas stuff, and we're going to get to the Ethena stuff too. But one of your other big things on your radar, and it's been on my radar as well, was the kind of LRT play, restaking in Eigenlayer, but also via these other apps. It was a huge cook for us for ETHify. That worked out really, really well. They're obviously running season 2. There are multiple protocols now that you can kind of go in to restake with. And there was also the huge amount of FUD last week on the Eigenlayer airdrop. They decided to add an additional, I think it was 100 Eigen to every single wallet, I believe. What's your kind of overall assessment of that position at the moment? Is it something to double down on as these LRTs go into season 2? Are you coming out of Eigenlayer now? What are your thoughts?
Sure. Yeah, I still think that like no one understands the thing, right? I brought up some explainers and stuff, and I still up on spaces hear people talking about it. And they don't understand it, which is an edge for me, right? They don't
Yes.
grasp what's going on. So I'm now feeling like we're going down the euthanasia roller coaster with all these airdrop chasing, right? Everyone's going more and more and more and more to the next thing, the next thing, the next thing. And as you mentioned, we're starting to enter season 2 for a lot of things that are established, dominant, and like as we know in this industry, leaders lead, right? Like you saw it with FriendTech, right? FriendTech came out, everyone hopped on that. You saw 75 other alternative things spin up, and everyone started chasing these other ones. And from then I said, like, even though like it's not the best and it's objectively shit as an application, it's interesting as a concept. You stick with the leader because wherever like the thing that grabs the attention is typically the thing that's going to continue to do it. That's just how our industry works. I did that. That paid off hugely. Now that we have Friend Drop and that one, I'm going to do the same thing here. Where like Eigenlayer came out, you're literally not going to get a replacement Eigenlayer. It has all the attention. Correct came out, you can farm that. Same thing with the LRTs. You have EtherFi, which was the big one. They handled the Eigenlayer drop really, really well, like the best of all the LRTs. So now I'm seeing signals of the things that were great that I want to now circle back on and double up on, as opposed to continue to chase down this rabbit hole of diminishing returns where you have like the mode airdrop and now you're chasing the 75th like whatever loaning protocol. Like I don't want that. I want more EtherFi. I want more Eigenlayer. I want more of the other stuff. So while everyone runs down the rabbit hole, I'm going back.
Okay, that's really, really interesting because I actually shared this in our Discord yesterday. Kind of just like this small reflection that I had thinking about how to double down. Like, yes, there's lots of new protocols coming out. How should we double down on things? This was my thought. Would be interested to hear your thought on this. I said sharing a counter idea. Now I'm going to be fading copy pasta protocols from now on. I don't know fully, and this was I picked. I don't want to name the protocol as such because there's lots of them. I don't know fully about this particular protocol is one, but think every restaking thing now is a derivative, and every derivative loses power versus the original unless it actually innovates to usurp the original. We'll try to double down on winners instead of chasing the next thing. For restaking, I'm thinking EtherFi. Something seemed off about some of these other restaking protocols that have been coming up, because I think actually what's happened is people have realized, all right, if we just copy and paste these groups' code and get a few investors in, we're going to have $1 billion protocol. It's like, that's not actually what it takes to succeed. If you just keep copying and pasting it and having it, then you'll just have more opportunists coming in to copy paste the same thing. So, and then the final thing I said was trying to respect, well, 2 things, seeing it on the angel side too, where there are too many things coming to the table and teams think they can simply raise the same by copy pasting whatever type of already successful project, trying to respect the power laws. Brad, any thoughts on that? Want to hear a reflection from Sam too before we get into the bigger discussion today?
Yeah, I honestly, I fully agree. Like, and that's not to say that it's not profitable for those people and maybe some users. It's just going to be, is it worth the time, right? Like I like the the conviction I can form on something that is established, and I can place something and let it do its thing, even if maybe it's not maximum return, but I don't have to watch it. I don't have to worry about them bugging. I don't have to worry about like all of the mental space that it would take up otherwise. So I'm fine doubling down on things that win because it's a confidence play for me. It's a less managed position for me. And ultimately, I think like it just, like on a long enough time horizon, it wins out. So yeah.
Yeah. Okay. Makes sense. Really, really interesting perspective. Really glad that we had a chance to touch on that. Sammy, final reflection from you on that before we get into it.
As part of my portfolio allocation yesterday, I did start doing some reflecting, and I agree with your point. Effectively, you've got all these protocols that are coming out of these really lofty valuations. A lot of them are coming out maybe I don't know, high valuation, low float, so it kind of sustains at that value. And actually, there's no fundamentals to them, so it kind of makes sense to me as to why where you'd previously have these big pumps on tokens that could potentially become something, people have shifted to meme coins, where you effectively have 80% of retail rather than buying in at the ICO. So typically with these protocols, you go maybe to a series A or B and then launch the token. I think this time round, you're having these people are kind of wising up to it and going, well, why would I buy high on these protocols? Why don't I just come in at a meme coin where I can do a 10x, 20x, make money with my friends on the internet, which effectively is what community is. And I think we're seeing this paradigm shift. So I think for me, I'm starting to see this. I know people have been talking about the meme coin super cycle, but I actually think this is probably a new cycle that's forming. And we've seen like institutions writing papers on it. I think that there's just like, it's becoming something actually that's tangible, and it is becoming tokenizing culture. I mean, even Vitalik wrote something on it. And I think if that's happening, things like PackMoon are kind of like, you've got like meme coins is effectively the biggest form of speculation. It's the purest form of gambling. So ultimately, you've got Blastr as a casino, which is why I think it's going to be such a high conviction bet, because it is probably one of the best, I don't know, global decentralized casinos, or probably will be once the token launches, that there is. So I think places like things like PackMoon and the top meme coins on there will do very well. So I think that's my thesis as to why I'm doubling down on Blastr, because I think that, and now I think after the mode drop, especially in some of these other ones, like the ROI just isn't there as someone who's farming it. It just doesn't make sense to me anymore. It does, like, I completely agree with you. It's just a copycat protocol with no fundamentals, no real value. So why would I do that? Why would I pump money into that when I can just pump it into a meme coin and kind of get that ROI? So.
Okay, well, I definitely take a point on the meme coins. Well, it's certainly the more risky play, I guess. But we're kind of getting into one of those headlines. So we'll switch up the order a little bit. We'll go to the mode news in just a second. Funky, your hand is raised. I want to give you a chance to come in on this first. Welcome to the stage, my friend. Put a bow on this topic for us.
Jim, everybody, I just really want to ask a question to Brett and all of you guys too. Just when Brett was talking about how it's easy to sleep at night when you just have your money in a winner, we know Eigenlayer is probably going to have its TGE soon. Do you guys, and maybe the same thing for Blast, as much as you guys have been farming Blast, do you insta dump these kinds of tokens when they are the market leader, or do you hang on to them? Because like every airdrop so far, I've just dumped for the most part. But Eigenlayer, I wonder, is this going to be the darling of the bull? It's the one that really kind of created this whole restaking narrative and everything else. Do you guys sell that? Do you buy it back in at a lower valuation if people sell off? Like, I just wonder how you're going to play that. In mode, we're seeing this, to your point, be just all these copycat ones that are coming out, the valuations disappointing people. Is that going to impact Eigenlayer? So I guess that's kind of like a twofold question that I just want to throw out there for you guys.
Let's go straight to Brett on that.
Yeah, easy answer for me is like everything is so heavily farmed right now that you see the farming pattern on every single chart, right? Drops immediately on launch, and then if it is something novel, so you're seeing like EtherFi, Eigenlayer, I bet would be the same, because and Frentech was the exact same, friend, right? They go down, and then if it's something that is like the leader of its class, Friend was a leader of SocialFi, Eigenlayer is a leader of restaking. Obviously, EtherFi was the leading LRT. Those tend to recover, and then they may melt down after that. So, but you're going to have that typical U pattern at the start. It's going to come back up because you have people rotate in that want more, they more exposure, even more than they farmed, and then maybe it'll bleed from there. EtherFi did the same thing, came back up with Eigenlayer, and then you have stuff like Camino or like any of these other just like whatever airdrops no one cares about, even if it is a leader. those go down and then they keep going down because you don't have those people that step in right after the airdrop. So I would wager the same thing's going to happen with Eigenlayer. Like it's going to go down because farmers have been farming, sibling it. It's going to go down. It's so novel and so groundbreaking that it will be recovered. So, but I'm not going to trade it. I'm just going to hold on to my stuff and let do this thing.
Awesome perspective. I think quite similarly to that as well. It's like the leaders lead. The leaders tend to have some type of recovery, and it's just the responsibility that you have as the recipient is to decide in your judgment, like, is this one of the is this an actually novel, useful / interesting thing, versus is it a copycat, not that much buy-in, not that much attention. So I would go with the same perspective there. Sammy, I don't know if you have a different take.
Yeah, I asked the question, who's buying? Like if retail have these expectations that they're going to come out, they're going to make these 10, 20x's from farming, their initial like cost of capital or whatever. I think expectations are wildly out of whack. I think that if they make 5, 10 grand, they're not going to hold on to it. They're just going to dump it. So I think, like, I always ask, like, who's buying? I just don't think there's any sign that retail is coming back. I think it's a completely different dynamic to the market. So I think personally, a lot of these airdrops I will dump just because I just don't believe in the protocol. But there are some that I do, and I will sell some of them to recoup at least the farming costs or something. But I have recalibrated my expectations because I do think the market's shifted. I think it's wisening up. I just don't think those lofty valuations are worth it. And I think a lot of these protocols, I know, I expect Mocha will do like a high valuation, low float kind of approach. But I just, there's very few that I kind of believe in. So I think for me, it becomes very difficult to make that decision to hold.
Yeah, I think that's very, very fair. So we've kind of been dancing around it, but the reason why I guess the conversation's gone in this direction is because of the mode drop, which happened in the past 24 hours. Let's just get into that as one of the headlines first, and we'll deal with the other topics to discuss a little bit later. So mode is another OP stack based L2, began the initial distribution of 550 million tokens yesterday. And in essence, it came out to, I think it's now less than a $500 million FDV. It had this particular strong take, which I read out at the top of the show, but maybe we'll just touch on it again. Because it contained, I think, like a bigger learning in there, which is something more philosophical about crypto, which I'll touch on in a sec. So it said now we've got more than 100 L2s, 52 active, 42 coming up. We've got 11 L3s. My biggest takeaway is that companies will continue hiring until the marginal net revenue per employee is less than zero. Likewise, until the default L2 valuations sink low enough, we're just going to get more L2s. This was a point, I can't remember who I was speaking about it with, but I've stolen it and taken it as my own because I thought it made sense, which is crypto has a product and infrastructure problem in that it seems to be so wildly profitable at the moment to just continue building infrastructure. Like, if every layer 2 or every layer 3 or every time someone announces a chain, if that's going to be continuously so profitable, it will attract the capital to fund that and to get that built, instead of people building useful things on top of those chains, which seem to struggle to get the higher valuations because the chain itself is always so valuable. And in that respect, it's almost as if crypto can't get to the next stage on some level. I mean, I know there's a lot of progress being made, but on some level, because it's so profitable to make these infrastructure plays, then we don't get beyond that. We just keep building that, and we don't build the necessary products to bring more users actually into the arena. I know we've kind of touched on it already. Brad, what's your kind of reflection on that more philosophical point on the incentives to build infrastructure in crypto versus consumer facing products?
Yeah, so they've been talking about this stuff I remember hearing this on a podcast literally 6 months ago. And honestly, it's just the time it takes for these things to come to market problem, right? We're perceiving it as if like right now, everyone is just going, oh my God, launch infrastructure, which some are, right? There's some copy pasta shit, but everything that we're seeing come to market now is something that has been cooking for 6 months, a year and a half, 2 years. And at that time, yes, we needed infrastructure, right? We needed this shit. And now it's all bubbling to the surface. We're going, why is everyone building all this shit? Like, it's stupid. There's 1,000 things. Well, I mean, these people have been building in the dark for a year and a half, right? So now that stuff's coming to the surface. The market's going to see that. And they're going to go, okay, now we can build applications. And I guarantee you guys, in a year and a half, 2 years, whenever it takes for people that are building applications today to come to market, people are going to go, why the fuck are there so many these applications coming to market? Everyone's building these things. They need to go back to infrastructure. We don't have the infrastructure to build this stuff. And then pendulum's going to swing back, and they're going to start cooking some more stuff with the new like intents and all this new scaling architecture that we have for rolling out some of this stuff. So like, it's constantly going to do this pendulum swinging back and forth of like, oh, infrastructure, oh, applications, oh, infrastructure. And you're going to criticize the other thing, but the reality is, like, at the time, that was the thing to build. We had a lot of teams doing that coming to market now. It's perceived as if everyone didn't recognize the person next to them and built it, which there probably was a little bit of a race for that. So yeah, I think it's just it's just an indication of time to come to market, as opposed to like everyone collectively making a decision that it's profitable, let's make money doing infrastructure now, which there is some of that.
Got it. Okay, that's actually really helpful kind of counterpoint, which is, yes, there may be too many. Yes, they'll be decreasingly profitable now, but actually when the decision was taken to do these things, it would have been potentially very valuable to all those people because it was something which was necessary at one point in time. And, you know, when you're trying to come to market, I guess you appreciate that even that there might be lots of other people trying to build that stuff at the same time, but that's why you're competing against them to try to build the best one, right? Like as EtherFi has kind of emerged as the top LRT, they will have known that there was other people doing it, and everyone will have known. It's just like, okay, well, who's going to be the best then? So maybe on some level that competition is still good, so that people can figure out who the best is.
I actually have a counterpoint. So I think you mentioned about the time lag, so 12 to 18 months. I think there's a lot of applications that are pretty interesting across different chains at the moment. And I think if that blockchain provides the right incentives, they can probably attract all the top tier applications or products to their particular blockchain. And all of a sudden you have this really powerful network of useful dApps. And I think Blastr is doing that very well. Like KettleFi has been on ETH for a little while. I think there's been like, I don't know, well, Fantasy Top's obviously relatively new, but then you've got Colony, which is now building on there. Easy's decided to move over there. You've got a lot of these applications that are now moving over there because the incentives around Blast Gold are really interesting, and that's where all the attention is. And I do think that if you have the infrastructure built in a certain way and then has the right incentives to get those users over, I think that can be a very powerful tool. And I think Mode, when I was playing around with that, I was looking at all these dApps, and they had like a DEX, they had like all the basic stuff, but I could move money around, but it was just really boring. Like I was just pushing buttons for the sake of it. And I'm an investor in Nibiru, and they didn't even have a DEX when they launched. So I was moving stuff to MEXC to sell it. So it's just interesting to see at what stage each of these blockchains are, what incentives they had. And actually, like I find if I'm just pushing buttons for the sake of pushing buttons, it's probably not the right blockchain to be looking at.
Yeah, I think that's a fair point. It's just, it shows, I think it's probably a testament to how Blast have kind of done their rollout. It's just been a very joined up together plan that's kind of cohesive and pushing all of their products out at the same time, and really being able to build some momentum there. So
I don't even think that. If you think about, I think the conversations we had with some of the dApps, they said that Blast effectively cracked the whip to make sure that they launched by a specific date. And it's like, actually they weren't ready. It's good. Yeah, it's great. It's great for us as users. It gives them.
It's good until you have a North Korean developer hired so that they can do it, make that deadline, and then all of a sudden you lose $25 million thing, right?
Exactly.
I would argue the deadline, you still don't have to hire that North Korean developer, even with the strict deadline. But I take your point. There were definitely some dubious things coming to market at that very beginning, like trying to take advantage of all the hype as well. So point taken in that respect. We want to keep it moving because we've got a bunch of other really interesting things to talk about. Let's do the bold Leonidas stuff first. So the headline, as you can see in the snapshot, which is pinned up top, is this NFT called Blastman, which bold Leonidas, if you don't know, I'm not sure how you may have missed it. Bold Leonidas does the kind of daily kind of funny comic strips and memes, often in Mando's Daily Minutes, but also just in general, producing awesome, like funny memes and art. But he did this piece called Blastman. It's on the screen for the people who are watching in on X and YouTube. The mint price was 0.15 ETH. It's refundable indefinitely after a 7-day lock. There's no funds that the creator or Blastr can like access straight away. And all they are guaranteed as the creator is the benefit of the yield of the time that money has been locked up. So there's 3,333. And Leonidas shared this screen where he shared how much TVL was locked up. So it's almost, well, basically 500 ETH, which is a colossal raise, really, or I guess about $1.5 million, on which he will be earning interest now for the next 7 days. And then I guess people decide, do we want to take our refund back, or do we want to keep the NFT? So very, very interesting mechanic. We're seeing this more and more from various people seeking to kind of enter onto Blast, because it gives every buyer some downside protection. With obviously, there's also the element which is it allows people to do some gold farming, given that everyone is completely obsessed with gold farming. So that's worth noting as well. But beyond that, I guess it's just kind of a new, novel, interesting way to come to market. So I think we'll split this into 2 sections. Maybe we'll go to Brad first on the kind of thoughts on just the mechanic. Like, is it a cool mechanic? Is it interesting? Is this pro creator? Is it ultimately pandering to gold farmers? And then Sammy, maybe thinking about it from the farming perspective, will come to you. So let's go to Brad first.
So it's pro creator first and foremost, just because it takes the pressure off them to have to deliver something. They can issue something, make a little bit of money, whatever. It's not as much money as they could potentially make launching it, but whatever. I'm still just baffled by the amount of creativity that's created by the concept of native yield when these tools have been available to everyone for years. Like, and I just want to, like, now I see this and I go, well, 7% is dog shit. I can juice this on L1. I'll do the exact same thing, and I'll just yeet all of that into Pendle YT, or not YT, PT, which is 60%, right? So like 10x this, I can do the exact same concept, offer 10x the yield for these creators, and do it all on the L1. Like literally the exact same thing. Except you're further doing it, because instead of just selling off the 7% that Blast is doing for their native yield through some USDB shit, I can throw it into PT, which is 100% redeemable. Plus, I'm getting paid extra by people that are farming points on top of that ETH for that duration. So like, same shit. So I continue to be amazed by how everyone now is amazed by Blast when all of this stuff has been available in the DeFi ecosystem this entire time. So maybe that's just a commentary on how something as simple as like default changes the perception of everyone that is. Like it abstracts the complexity of DeFi, right? Now, no one has to think about DeFi. They don't have to think about how you get that yield. They just get it, right? Because it's assumed once you're over there. And the power that enables in the creative ecosystem is amazing, apparently.
Do you not think then that's something that really speaks to the importance of how you wrap that product up, right? Like, if that's been something which is available, and if not better terms available on mainnet kind of as we speak, there's clearly some disconnect between
it's commentary on the builders too, right? Because like no developers put together a minting platform that allowed for this, even though the tools were there, right? So it's not even a commentary on the creators so much as the builders didn't enable that for creators. So like all the way up the tree, you can see how it's impacting the ecosystem. So yeah, it's interesting to observe.
Interesting. Sammy, I want to come to you for us in a second on the farming stuff, but maybe we'll go to Confusion first, who has his hand raised. Welcome to the stage, Confusion. Any thoughts on the Blastman mint by Bold Leonidas?
Yeah, I think it's a kind of a really good way to do it, because yeah, as you guys said, it's kind of like low risk, but there's incentivization through Blast Gold. And yeah, I just think, yeah, a lot more artists and a lot more people are going to be kind of going with this approach. And even for example, OSF, like, you know, he did a similar one as well with Pack Rect. And what's interesting is, sure, you can get I think you can get a refund within 1 month of the mint, but you can also choose to upgrade it. And then I think if you do an upgrade, you get additional benefits. But yeah, I just think it just opens up a lot more possibilities for artists and just in general. And yeah, I think yeah, it's just an interesting new way to get people to mint your work.
Yeah, very good point on the upgrade kind of functionality. I think the way that it works is you can basically choose. I'm just showing the Packrect collection on screen for the people watching in, which is now up to a 0.3 ETH floor, and I believe it minted much less than that. It might have been less than 0.2, I think. So very profitable. So yeah, I think you can upgrade by saying, look, I don't need the money back. I'm happy to support you. And then maybe the artist has offered some extra functionality or utility or something in order to kind of for you to forego your ability to refund. So something to watch out for. Sammy, what are your thoughts on this kind of mechanic and maybe thinking about it from the farming perspective? You've got this kind of downside protection. Like how are you playing these collections? I know you've got a bunch of Packrect, for example, I think. So what are your thoughts there?
Well, I have a couple of points. I think just on the points that are made by Confusion and Brad, I think it's interesting I know that it's been around in DeFi for some time, but I think we've got to remember that a lot of the guys participating in the Blastr ecosystem are from the NFT side and probably came from a creative angle. So for them, they're seeing it first time round, and it's novel. I do think that how they package it up, like you said, B-Check, is very important. And I think that is half the battle. You have a lot of builders and developers building all these complex systems that your average person just isn't going to understand and they're not going to buy into. All of a sudden you put it in a certain limelight and everyone's like, wow, this is just insane. This is like a car. We used to have horses kind of thing. So I don't know. It's interesting. And I think that this is the kind of innovation that happens through each cycle. You have these features that are product or packaged in a certain way that come out that then other people start building on. And it's like a eureka moment. And I think those things are very powerful. And I think we're going to see a lot more innovation with this native yield over the next couple of months post TGE and probably over the next 12 months on the Blastr ecosystem. But yeah, on the trading side, I did have a lot of Packrect. I've still got some, but I got wrecked, excuse the pun. When Pac-Man put the switch on, he was like, okay, well, this doesn't get any points anymore. I bought in at like 0.24 or whatever, it immediately went down to 0.7. And I was like, well, I need this capital to do something with. So I just sold it all and took like a 5K loss or whatever it was on that and shifted it to something else. But yeah, I think with this Leonidas stuff, I like the artwork. I like buying into that. So I'll put some bids in, farm Blur in the meantime, maybe grab one when it gets to that redemption, beyond that redemption point, just to hold long term. But yeah, I think it's interesting because I do wonder whether he'll end up having a similar thing where people will pump this price up. Pac-Man will then be like, okay, well, there's no royalties on this one. Let's turn the points off, and then it crashes, and then they turn the points back on, and then it's eligible because he puts the royalty back on. So I got burnt last time, so I'm a little bit wary. So I'll be watching it a bit closely, and I won't be leaving bids in overnight that are above that 0.15 redemption figure. So
interesting point. Yes, you mentioned that. Yes, a lot of the kind of Blast participants are NFT people. That's fair to say, and it's also fair to say that a lot of them are very profit minded. So a lot of this activity is farming related. So we'll have to keep that in mind. But in principle, I'm just seeing a comment from on X from Q. Q said, with bold Leonidas, it is an elegant and perfect way for the artist to continue to do their work and at the same time not being a slave to the fantasy top card ecosystem. Definitely interesting. Like really, really interesting way to now come to market in a different way, a little bit less pressure out of the gate. You manage to make some money. Maybe you don't keep all of it. Maybe it's good that you don't get to keep all of it straight away, because sometimes with these mints, what happened previously is a relatively new creator, a relatively new team very, very quickly got all of this ETH instantaneously and then had to be trusted to execute on it. And maybe they weren't necessarily capable of doing that. So interesting to see. Nice to see more choice for people to come to market. That's my kind of key takeaway. Very, very interesting to have that protected downside. Let's move on. We've got a little bit more to do. We're going to do the Web3 Roundup to get you up to speed with everything else that's been happening in the space. And then we also want to touch on Ethena, which I think is pretty important news. And unsurprisingly, NFT/crypto Twitter has not been really talking about it. So let's get to the Web3 Roundup first, get everything else into the agenda before we move on. Number one, as always, is from the snapshot, which is pinned up top. FTX has amassed $14 billion to $16 billion through asset liquidations to fully compensate creditors. That's pretty good news, although I wonder whether it's actually the amount of crypto that they had versus the dollar amount that they had. So they could still potentially be down, but at least they're getting some portion back. Number two, Bitcoin runes have overtaken Bitcoin ordinals and BRC20 tokens in daily transactions. That is pretty interesting to see. Definitely been less attention on rune side of things in the last few days on NFT Twitter, but interesting to note that. Next, newest Blast meme coin Big wins the third gold jackpot on Blast. Sammy already touched on that. Meme coin launchpad Pump.fun is generating more fees per day than Uniswap. That's pretty impressive. Getting into some final news, $438 billion asset manager, I don't know how to pronounce this, I don't know, just a really big asset manager discloses. There you go. $1.3 billion Bitcoin ETF portfolio. Hopefully more institutions can follow in that direction. NFT Inspect announces pause on its token claim for investors as it undergoes restructuring. Interesting to note there. Sammy and I were investors there, and now we can't make our claims anymore because the token's been going down too much, I think. So I don't know how that opera works legally. But for the tokens that keep going down, and we've been speaking about that earlier with Bread, something to note. Maybe they'll just turn it off at some point in time, but we'll have to monitor that situation and see how it kind of plays out. It is important to note as well that investors are definitely up on their investment there. I don't know what's going on. Need to speak to legal. And finally, Ansem announces Ansem Media incoming with a teaser of Dubai vlog. Always want to cover like content creators and note the most important kind of contributions to media as we navigate the space, since we do it so often ourselves on X. That's the Web3 Roundup to get on top of everything else that's happened in space in the last 24 hours. We want to get to the final headline, which is this Ethena news, which I'm going to share on screen for the people who are watching in, and I'll read it out for the people listening. We've got Ethena's ENA token jumping 8% as Bybit endorses the USDE token as collateral for derivatives trading. Ethena USDE tokenized yield strategy has attracted over $2 billion in deposits and some scrutiny of the token's risk. Remember, Ethena is like this, it's a synthetic dollar. That's how it kind of operates. You can take your dollars and exchange one-to-one for USDE. And the news here is that Bybit has integrated USDE as collateral assets for derivatives trading and also lists spot Bitcoin and Ether pairs against the token. Using USDE as collateral could help perpetual traders to reduce risk. That's the thinking, at least. A little bit more background, and then I think we'll go to Bread on this first, and also want to hear from Sammy. For the people who don't know, decentralized finance protocol Ethena rose quickly in the last few days. The synthetic dollar, blah, 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 blah. Bybit has added USD as collateral for asset perpetual futures trading with leverage, and also listed spot Bitcoin and Ether trading pairs. ENA hit its highest price target in like most recent time. And this is kind of how it works if you're still unfamiliar. The protocol's USDE token, often referred to as a synthetic dollar instead of a stablecoin, is a structured finance product wrapped in a token. It offers steady yields to investors by using ETH liquid staking derivatives such as Lido's ETH as backing assets, pairing them with an equal value of short ETH perpetual futures position on derivative exchanges to keep anchored at a $1 price. This strategy is also known as a cash and carry trade, which harvests derivatives funding rates for a yield. That is a bit of a mouthful. It's got a lot of technical words in there. I guess the key, and I think it's worth diving into more. I've had to watch multiple podcasts on Ethena to try to get an understanding of what's going on there. Yes, there are still risks. But I think the key question based on this news for Brad is Ethena looks like it's getting integrated into crypto more broadly, particularly this point about it being used as kind of the USD pair for trading, like Bitcoin and ETH on exchanges. I think that's very significant, because one of the arguments has always been that one of the arguments for USDT dominance has been that some of the major exchanges simply need it in order to trade the other major crypto. So what are your thoughts here in terms of the significance of USDE being integrated into centralized exchanges?
I mean, yeah, honestly, it's just good to have a crypto native product that is starting to plug into the actual stablecoin market, right? I mean, we have crypto native stuff with just straight up USDC, USDT, all that stuff, but all that's is an external entity. It's not like rooted in like a crypto centric product. So it's good to see something that comes out of our ecosystem that is creating a product that simulates the US dollar, which is good. I can't speak to like how effective the strategy is or like downside risks, that stuff. What I can say is stablecoin market, and Tether in particular, has been printing profits off of just right. The original real world asset is the dollar, the tokenized dollar inside of crypto. It's all over the fucking place. We need it, and it's very, very profitable for Circle and for Tether. So now that Ethena is getting in on this stuff, and they have a native token in ENA, it's something that now, whenever I was evaluating the things to farm, it's something I'm very, very interested in, because yeah, they're going to continue to eat into this market. The upside is larger than most people understand, and I want to have exposure to that. So yeah, it's good because there's a native product, and it's good because there's an airdrop opportunity for us if you pay attention to it.
Yes. Very important stuff. The key thing there, and one of the reasons why I've kind of been participating with Ethena from the get-go, is the stablecoin market. Such a huge use case for crypto. Like, genuinely, it seems to be one of the most useful things, one of the most used products in crypto. And B, it is why it always came across. It always struck me how wildly profitable Tether was. Like, it's just an outrageous business model, frankly. Like, you just give them the dollars,
right? No one thinks about it, but yes, it's wildly profitable.
It's just an outrageous business model. It's like, because we all give, I guess the reason why we're happy to give our money into something which we don't expect a return on, which is what we do when we exchange our fiat for stable coins. Typically, when you deposit that, you expect some return, but we don't expect any return on that immediately, because we think we're going to go off in crypto and make loads of money. But then, because they've got the dollars, they can just park it in anything and just make truckloads of money, like risk-free.
They're winning with treasuries, right? They basically know, like, very low interest rates, and they're just eating, right? Because whenever you're at that size, which is the entire crypto market effectively, yeah, you start to make pretty good money.
You also have ridiculously low costs. You've only got like, I think they've only got like 20 or 50 employees.
Yeah,
for making 6 billion, is it 6 billion in profit a year, or revenue? 6 billion revenue a year for that many employees, you're going to make a significant amount of profit every year. So it's an insane business model. And I do think with this this ENA stuff, something that suddenly twigged for me was when you said about the cash and carry. I was like, okay, well, is this basically an on-chain hedge fund? Like, you've got the 2 and 20, which is effectively a traditional model where you take 2% of the assets under management as a fee, and then you also take 20 on the capital gains of that particular asset. So, and I do wonder whether the link to perps, that's kind of probably where that ties into. But if they do that and they do it well, then it could be an incredibly lucrative model. It does have more risk than a traditional stablecoin issuer or whatever, though, because obviously it's a different model.
And on that, they are building an insurance fund. So, like, that's always been the big criticism. Everything works well. Funding is going crazy in an uptrending market. Whenever things are downtrending, can you potentially save yourself from like black swan events or like, big dips down? And they are building an insurance fund for that. They've talked about the risk. They've done a lot of back tests to see like how their model would hold up like against prior events. Can't predict the future. So, like, they're aware of it. They've outlined the risks. They think they're safe. We'll see.
I was just laughing, Brett. I realized you can't see the comments on YouTube. Tiro just said, Bread himself is an insane business model. It was literally alive, and then we kill it to make sandwiches each day. The joke.
I'm telling you, it's endless. It's endless.
Endless. Absolutely endless, this.
Everyone knows Bread.
Absolutely endless. Don't know how you deal with it. Funky, we're coming to the end of the show now, my friend. Put a bow on this topic for us. It's been a great discussion. What's your final thought on this kind of stablecoin business model / Ethena's integration with centralized exchanges.
It has been a wonderful conversation, and I think it's somewhat interesting that today, 2 years ago to the day, is when UST started to depeg. Steady lads, deploying more capital. And I think a lot about Bread's prognostication in terms of all those liquid restaking and staking being the big meltdown later on in this cycle. And I can't help but wonder, just hearing how this model is backed, if that could be, although he said that they've run, models and back tested it, something about this just has my hackles up a little bit. And, I just would urge people to be cautious when it comes to these synthetic derivatives, as they're not dollars the way that, say USDC or USDT is backed. So just an interesting conversation overall. And I also have to make one last comment about Bread, seeing him on cam, he's got that desk behind him and it sounds very echoey. And I can't, in my head, it seems like he's that guy who you see on crypto Twitter that just has a mattress on the floor and is just straight grinding and making six-figure sums on everything that he touches. But it was great to get so much insight from Bread today. Thanks.
Just locked in, focused on the market. Yeah, absolutely love it. I can't echo what you just said enough. Always great to have Bread on the show with us, on just as a speaker on audio, but also on video too. Very much appreciative for that. And that's it, guys. We've come to the end of the show today. I hope you have enjoyed it as always. Thank you so much as always to my co-hosts, Sammy. Also, special guest today, Bread. Always great to have him with us. And thank you, Funky, for your contributions too. Thank you so much for joining us in the audience. We'll be back again tomorrow. Bread, any final reflections?
Nice. It's always fun to hang out with you. So appreciate you for having me up.
Awesome, man. Thanks so much for joining us. Take care. Have a great day. And we will see you tomorrow. Bye-bye.